Hi traders, this is Forex Nelson. I'm back again today with another training video for my Super Sniper trading system. Today's date is April the 16th, and this video will be called How to Scan and Find Trades. Video will be about 30 minutes long, and basically it'll be somewhat similar to how to trade higher time frames. And of course, if you're a day trader like myself, well, you know, the 4 hours and a daily is usually good enough, as it'll go in that direction more often than not. And of course, I like to see the 1 hour also cooperating. Just watch that video, how to trade higher time frames. So once you establish the fact that you've checked the higher time frames, then you have to do a trade plan an hour or so before you start trading, whether it's Asian session, London session, or New York session. So I put a line on the beginning of each one, and of course I'm putting arrows. Now once I've established the fact that the trend is down, there's the arrows. Must wait for the pullback. Goal lines going down. Everything qualifies for a great way to trade. So how to scan and find trades. After I check the higher time frames, everything's suggesting a down move, qualified for a great way to trade, as you can clearly see. Moving averages are looking great. So from Asian here, we're just always going to wait for a pullback as close to the goal line as possible. If you pull the trigger there, that's your stop, 11 pips. That's producing 20, 30 pips. Moving a little bit more over to London here. Must wait for the pullback. So here and here, you can pull the trigger. As long as you can live with about a 12 or 13 pip stop, which is fine for me. Producing about 50. That's a good return. Here's your next pullback. If you pull the trigger right on the moving average here, stop is 18 pips. Didn't even go 1 pip against you. Producing around 55. It bottomed out here. So that London move actually did produce approximately around 75 pips. And then of course once it comes back again to the goal line, stalls out, red candles, you can give it a go again with a 12 pip stop, and that's producing 30 pips. And this late in the day, which happens to be lunchtime, 12:30, so price eventually goes back again to the goal line area, and everything starts going a little bit, look at that, more than 50 pips for Asian going, the other direction. So remember, trade management and money management, you must have that in order. Okay, let's move on to the EuroCAD trade example. Now once the market makes a move below the goal line, and we're starting to see some red, still above the waterline, doesn't quite qualify for a great way to trade until this blue candle. Goal line's going down, everything is great. So I put an arrow at every entry point for selling, and it's based directly on the higher time frame, say 4 hours daily. Comes back, sell, 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 sell. This first run is producing 50. Next run is producing 40. Next run is producing 30 to 40, and you can carry on. That's why I love trading with these 3 moving averages. Everything's clear, qualifies for a great way to trade. There's your pullback, get in, risking 15, and it maxed out at around 57 pips. Fantastic trading. Another good example on this EuroCAD. Makes a move back up to the goal line. We know we want to be selling. qualifies for a great way to trade right here on this blue candle. Goal line's going down, so every time it comes back up to the moving averages here, 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 you can jump in. So lots of pips to be made here, both for the New York and the Asian session. And that's the way trading is. Super easy, a lot of fun using the Super Sniper. Let's run a check on this Euro Yen. Here we go. We know we want to be buying. Everything qualifies for a great way to trade. Here's your first pullback. Entry with a 10 pip stop. This is the New York entry. All these candles are entries. So the London made a move of 120 pips. And New York, after the pullback, get in with a 10 pip stop here or here. And that move there is 100 pips. So remember, always wait for the pullback. That's the magic word. And the golden rule is take the trade as close to the goal line as possible. And also, anytime you get more than 100 pips within the blue box, you're going to have at least one bus driver. Make sure you have the meter running. And on this pair, Euro Yen, the Yen market is closed. So the Yen might be, it could be 30-40%. But the Euro could be like 90%. And then that's why you have a very nice move on the way up. Euro market opens at 3 a.m. New York time right here. And it keeps going and going till 11 o'clock in the morning right here. But as you can see, it did not do the London close pullback. Some days it will, other days it won't. If the meter is like 85-90%, well, it's going to keep going up. Okay, let's move on to the Euro New Zealand. Remember, watch the video on how to trade higher time frames. You want to be going in the direction of the 4 hours and the daily. Once you establish that, then must wait for the pullback, or else you're going to be down 40 pips. So once you wait for the pullback, yes, that's what the magic word is, pullback, and you're going to get into trade as close to the goal line as possible. So let's say you pull the trigger right here. Your stop now becomes only 10 or 11 pips. That's what you risk. And to get 110 or more, 120. Excellent return. And of course, you can pull that trick one more time to grab another 40 pips during the Asian time frame. Moving right along to the euro dollar. Remember, the rules don't change. Make sure you're going in the direction of the higher time frames. You must wait for the pullback, which happens to be almost 50 pips or thereabouts. Now once, and that's why I put the arrow, after I do my daily trade plan, I know I want to be buying. Goal line's going up and we're above the water line on the AO. That qualifies for a great way to trade. You're just going to follow the TZ down when it gets near the bottom, turning blue. So either this candle or this, let's say you pull the trigger here. Stop is 16 or 17 pips. To there is 94, to there is 100 and, well, you can get around 140 pips. I tell you, some days you're going to get a very good run. Myself, I would close out around here, as and I'm not going to bother with this next cycle. Remember, the market goes in cycles. Makes a move, pull back, move, pull back, move, pull back. And the best time to trade is the first 1 to 3 hours when the market opens, like the beginning of each session. Whether it's Asian, London or New York. Once you learn this concept way of trading, trading's going to become a lot more easy for you. Now we can get into the pound pairs. Nothing changes, same idea. London move, and there's your pullback. I put in a couple of arrows to show around the goal line where we can get in at. So let's see, if you get in there, it did this, and the market does this from time to time, but it's only 12 pips. So that's why I like to use minimum 20 in case, you know, there's a bit of a problem here. And it did top out with about 70. Very good return for this pound Aussie trade. Okay, let's move on to the pound CAD. Now we're getting into sell trades. London did push down. There's your pullback. That's what you're waiting for. And then I ended up putting an arrow here because the higher time frames are telling me to sell. I put in 3 of them. These are all points where you can get in, including here, 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 and here. This one you can pull the trigger, remember, as long as it touches it. And if as soon as it starts going down. Now it could go up and it could go down as the candle is moving. And remember, it can go back up to there, which is about 11 pips. So got to put in at least a 15 pip stop, maybe 20. And that move right there is around 44. This move down there is around 70. The same thing, 44. So you get the idea. Every time it does the pullback, get in. And remember, eventually, it'll stop going down. You'll get buy signals. And all of a sudden, it'll go back to the goal line. Look at that, 35 pips. But I'm not trading this for sure. This is like 2 o'clock in the afternoon. So let's move on to the pound Swiss. Nothing changes. Higher time frames are telling me to sell. There's the arrows. Everything qualifies for a great way to trade. Waiting for the pullback, that's the magic word. You're going to get in as close to the goal line as possible. All the way through here. All these are entry points, including these 2. So if you put, like for myself, I'd be happy to grab this with about a 10 pip stop. And it did bottom out with around 45. Missed that one. Tried not to pull the trigger here. It's hitting support. There's a very good chance it'll go back towards the moving averages. And that's like about 20 pips. So just wait. Get in about here. You'll have within a 10 pip stop. And it did bottom out with, you know, you can get around 35 pips here. So you can take at least 3 positions if you're the type of trader who wants to add to your position so you can make 3 times more pips. Well, I just showed you how easily you can add more positions to the one instrument, pound Swiss. Okay, now we can move on to the pound yen. It's one of my favorite forex pairs. So once I established the fact that higher time frames are saying to buy, I put in the arrows. These are all buy points all the way through here, here, and here. London gives a push up. Don't ever buy here because you'll be down 70 pips. So you may as well just wait. And of course, the next video is called How to Trade Pullbacks. You can actually trade the pullback. From there to there, nothing wrong with grabbing a quick 40 pips. And then once it's bouncing around here for a while, you can get in with a 10 pip stop. And it maxed out to 125 pips there. The next pullback, it spiked down here. This is exactly what the market does. Your stop will be 10 or 11 pips. To the top up there is over 100. And then you get one more chance right here. Stop is about 18 pips, and that's like 80 pips. very good returns. And of course, this is exactly the way you like to see it. Now, if the price action goes below the goal line, you can go up to the 30 minutes and it'll look better. And if it's too far away, like all the way through here and here, if you drop it down to the 5 minutes, all these candles will be around this position, around the 30. Remember, this is a 20, 30, and the 50 EMA. So you just play between the 5, 15, and 30 minutes, and this is more or less what you want to see. So moving right along to the pound New Zealand. London did this. Now I did my daily trade plan. We're going to sell. Everything qualifies and looks great as far as a great way to trade. So when it does the pullback, that's the magic word, you're going to get in as close to the goal line as possible. Stop will be about 10 or 11 pips. And anywhere through here is like at least 150 pips. And it just kept going and going and going, and you can manage the trade. You don't get a buy signal till way over here. But I'm going to be closing out over here somewhere. So wherever makes you happy, just manage your trade, shut it down, and done trading for the day. Okay, moving on to the pound dollar, another sell trade. Moving averages cross over here, and they're going in the proper order, diverging. Must wait for the pullback. Remember, wait for the pullback. That's 30 pips. When it hits the goal line here, here. Now mind you, all of these candles you can pull the trigger. Closer to the goal line area is always much better. Now, I would miss all of these trades, but this is the one I'm waiting for. Try not to sell here, or else you'll be down 35, 40 pips with the spread. Take the trade right around the goal line. Let's say you pull the trigger as this red candle's dropping. Your stop is to the first swing pivot high to the left, which is this one. 9 pips. Maybe you can go 18. It's up to you. It did not even go 1 pip against you. It just dropped. And it dropped until finally you're going to get around 80 pips. When you start to see some blue down here, you're around the London close right there. Then expect a London close. You can buy, and eventually, like I've said many times, it hits the goal line. 20 pips, not a lot, but price action always comes back to the goal line. Okay, let's move on to the dollar CAD, another sell trade. Look at the moving averages are looking good. London finally kicks in. So either you're going to catch it right here. Let's see, producing 27 pips. You can catch it here. Anywhere in this T area, there's no right or wrong. Now if you pull the trigger there, sometimes it will do this. It's only 7 pips, not a big deal. If you get in there, it's only, well, same thing, 7 pips. If you get in here, that's where your stop is. 10 pips, let's go with. And it did max out all the way to here with 57. But if I can get 30, 40, or 50 pips, especially on this dollar CAD, because it doesn't, some days it doesn't, certainly doesn't move like the pound pairs. And of course all these arrows plus more are entry points, including right here. Stop 10 pips, giving you 34. Trading is, once you understand this simple, easy concept, you're going to find a lot of trades every day. And you're going to love the Super Sniper. Moving on to futures. Pays more, moves more, and you're about to find out. Crude oil, $10 a tick. In futures, they call it ticks as opposed to pips. So from the London, bit of a pullback here. Once established the fact we're buying, then you're looking for entry points as close to the goal line as possible. This is okay, 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 okay. So if you pull the trigger here, that London move was 823. Now if I pull the trigger here, the New York move was 747. Now if you multiply that by $10, you're looking at about $7,400 if you did one standard lot. Now when price action is not going any higher up, then you can expect some kind of a pullback to around the goal line or further down. Sell signals are here and here. And of course, you know, the next video will be showing you exactly this. If you get in as high as possible, there's your stop, 86. Please keep in mind that a 10 or 20 tick stop, generally as a rule, is not enough. And you're risking 86, and look what you got, 900. If you do 900 times $10, that's $9,000 on that one standard lot. Now we can move on to the German DAX 30. Once we establish the fact that the higher time frames are selling and it qualifies for a great way to trade right here, you must wait for the pullback. Of course, if you pull the trigger here, well, you know, that is 1,605 ticks against you. And remember, you can double your account when a number hits 1, 3, 3, 4. Just wait anywhere across here, pull the trigger. There's your stop. Don't freak out as it's a high number, but risking 350, and that's 4,000. See the huge difference? You're going to double your account on, let's see, well, this candle right here. If you had a $5,000 account, you did one standard lot, it is now valued at $10,000. Now if you take 4,000 and you times that with a calculator, $3.75, that is, you're probably going to make 3 times more than $15,000. So huge, huge profits, but make sure you're going in the right and correct direction, as you don't want to be buying here. That's not a good plan, even though we have a lot of blue here. Higher time frames are saying to sell, not buy. Okay, let's move on to the Dow Jones. This one pays $5 a tick. Once we establish the fact that higher time frames are saying to sell, moving averages are in order, qualifies for a great way to trade from back here. Just wait for the pullback. You're going to take the trade. It's around 280, and that's around more than 400 times 5. If you did one standard lot, that's $2,000. Don't sell here. You must wait for the pullback and then trade again for another 400, another $2,000. Okay, let's check out gold. Gold pays $10 a tick. So from 6 o'clock, my trade plan is saying to buy. Everything is in order here. And it qualifies for a great way to trade. Wait for the pullback. Get in here, or these candles, or this one. Stop will be about 20 pips or so. Less than that. Oh, let's go with 20. It did top out with 280, or here 240, whichever one it is. That's 2,400 or 2,800 if you did one standard lot. Moving right along, let's run a check on NASDAQ. This one pays $20 a tick. very, like in this area, right at the right-hand edge, everything looks messy, right? But this is very important, why you must have a daily trade plan. And then the market starts to move. Push down, and there's your pullback. Get in. Push down, there's your pullback. Get in. So from there to there is roughly, now remember, you're going to remove the last two digits. Let's round it out to 150 times 2, that's 3. That would be $3,000. Keep in mind NASDAQ, the magic number to double your account is 250. 250. If you manage to stay in the trade, 250. And there it is there. If you did one standard lot with a $5,000 account, now mind you, if you had a $500 account, you can do one mini, and at this point right there, it'll go from $500 to $1,000. And you can double your account pretty much every day. Now if you have any questions about doubling your account, just get in contact with me and I can answer them. Russell, another one you can double your account. And it does pay $10 a tick, and to go to 5,000, then you're going to need 500. The magic number is 500. London. Now if you drop it down to the 5 minutes, these three candles will be around the red EMA. So if you pull the trigger here, stop will be about 40. And it did top out with 450. So that's 10 to 1 profits to what you're risking. I would miss that, of course. Entry would be on these three candles and these three candles. Get in, risking about, didn't even go 1 pip against me. And it producing about, 380 times 10. That would be $3,800. Pretty good return. Moving on to the S&P 500. Nothing changes, everything remains the same. Moving averages cross. And you want to have the 4 hours, and the 1 hour would be in your favor. 4 hours daily. You could have the weekly, monthly. That's why you have to have some sort of a trade plan. You must wait for the pullback here and here. Let's say you get in about here. The time on that is 8:45 in the morning. Stop is the first swing pivot low, which is about 70. You're risking 70 to get over 700 times 5. That would be $3,500 for that move. You can add another position here, locking in, 62 times 5. That's over $3,000 on a standard lot. Okay, let's move on to silver now. Silver pays $50 a tick. Moving averages are starting to line up. They're diverging. Gold line's going up. We're above the waterline on the AO. Qualifies for a great way to trade. Entry points when it comes back and hits the moving averages. So 1, 2, 3, 4, 5, 6, 7, 8, 9. You can enter the trade many times. London push was over 100. So let's see. Actually, that's quite a bit. And times 50, that would be $5,000. So to double your account, you need 100, obviously. Doesn't happen every day, that's for sure. Now the next entry for myself, wait for the pullback. Because if you take the trade here, next thing you know, you're down 50 pips. You'll be down, like $2,500. But if you wait for this candle to not complete, but go down, as soon as it hits the gold line right there, get in. It's on its way up. And it just kept going and going and going, giving you your 100 again. So you can double your account here and here. So that sounds like a pretty good plan. Any questions? Well, you know what to do, and I certainly can answer most of your questions. Well, we have one more to do. 30-year bonds. This one moves the lease amount and it only pays $5. Let's see. Definitely looks like it's going down. Qualifies for a great way to trade. London pullback. All these candles you can take to trade. All of these candles, including this one, and this one, and this one. So let's see. This move here is producing for London 120 times 5, $600. This move here is producing 90 times 5, that's $450. And eventually you'll see that it just died out. And that's just the way trading goes. Anyhow, definitely time to wrap up this video. Of course, if you have any questions, just get in contact with me. And if not, we'll see you in the next video.